Hi everyone, this is Paul Anderson with Primary Residential Mortgage in Boise. I love the mortgage and the real estate industry, and you know my passion is helping people achieve home ownership. I also know how important it is to help guide you on your mortgage journey. So we put together this video for you, and I hope you enjoy.
As home prices rise and interest rates remain near historic lows, homeowners can tap into their home equity more easily. To start, a cash-out refinance typically lets you withdraw up to 80% of your home equity. And the great news is that you can use the cash for anything, from home improvements to debt consolidation. If you qualify for cash-out refinancing and use the money wisely, you can seriously boost your financial portfolio. Let's look at how a cash-out refinance works. Like other refinance programs, a cash-out refinance replaces your existing home loan with a new home loan, typically at a lower interest rate. The difference with a cash-out refinance is that your new loan will have a higher balance than you currently owe on the home. With money from the new, larger loan, you'll pay off your existing mortgage lender. Then you'll keep the additional cash from the new loan for yourself. This leftover money is your cash out. Here's an example of what cash out refinancing might look like. Your current mortgage balance is $250,000. Your refinanced loan balance is $280,000. So your cash out is $30,000 minus your closing costs. Keep in mind, you can't withdraw all your equity using a cash out refinance. Lenders typically require homeowners to leave at least 20% equity in their homes, which limits the amount you can cash out. So how much cash can you get with a cash out refinance? The amount you can cash out depends on your home's value and your current loan balance. The refinanced loan amount typically maxes out at 80% of the home's value, though some VA cash-out loans allow up to 100% financing. For example, if your home is worth $350,000 and you owe only $250,000 on your original mortgage, you have $100,000 in equity. This example assumes you don't have a second mortgage, but you won't be able to get a $100,000 check at closing. First, a lender will calculate 80% of the home's value, in this case, $280,000. That's the maximum loan amount for your refinanced mortgage. This is also known as the max loan to value ratio, or LTV. When you refinance the new loan worth $280,000, you will pay off your existing $250,000 loan balance. The amount of equity left over, which in this case comes out to $30,000, is the most you can take out using a cash-out refinance. But don't forget about closing costs. If you have $5,000 in closing costs, your final check will be $25,000. How can you use your cashed-out equity? Here are some examples of how you could use your cash-out refinancing funds. Number 1, complete home improvement projects. Using your cash-out refi to fund a home improvement project is often a great investment. Number 2, pay off high-interest credit card debt. Using your cash-out refi to pay off high-interest debt like credit card accounts or personal loans could be a great way to lower your monthly payments. Number 3, add to or protect your existing investments. A cash-out refinance can also enhance your investment portfolio. Many investments pay better returns than the cost of borrowing against your home. If you need cash and don't want to sell existing investments, for example, in a down market or with an investment that contains a penalty, like retirement savings or CDs, tapping your home equity might be a cheaper option. Number 4, buy an investment property. You could use cash from refinancing your primary residence to buy more real estate, such as a rental or investment property. You may also, in number 5, buy a second home. If you're not into being a landlord, but you do want another home, you can cash out your primary residence to buy a second home or vacation property. Today's home values are high, making it easier to raise enough down payment cash to buy a second home. You may be wondering if you qualify for a refinance. Your ability to get approved depends on your credit score, debt-to-income ratio, and the value of your home. Credit requirements tend to be more stringent for cash-out refinances. Some lenders allow FICO scores starting at 620, but others may require 640, 660, or higher. You'll also need a new home appraisal to verify the home's current value is enough to support the cash-out loan. And you must have steady income and employment. Be sure to check with your lender to get your questions answered. Many homeowners do not refinance because they do not want to take out-of-pocket money to pay for their costs to close the loan. Rising home prices and low mortgage rates put homeowners in a good place to cash out their equity. If you can take cash out of your home for a good purpose and lower your interest rate at the same time, you can really put your equity to work. Be sure to work with a licensed mortgage professional who can help you determine the right program for you.
Thank you very much for watching. If you have any other questions regarding mortgages or the mortgage process, please reach out to me. To learn more about this and other topics, feel free to give me a call or email me. My contact information is listed below. I always love to answer your questions and help you achieve your goal of home ownership. I look forward to hearing from you soon. Have a great day.